Yo, guys, it's Marcus Scraper. I just want to talk a little bit about why it's so important to understand both the bull and the bear cases and kind of how that's caused the shortcomings with short sellers lately. And you have to understand what it is a company is really trying to build. What is their goal? What are they working on at the moment? And if you're not understanding what it is they're trying to build, as a bull, you kind of know what it is that they're trying to build. This is kind of the thesis of where we're going and why it is that we're going to go up to a certain extent. And there's always a bear case and there's always a bull case. And you have to understand both cases. Sometimes one case is a lot easier to understand than the other case. For example, when we were in the bottom of the stock market in March, or just starting to recover in April, it was so easy to understand the bear case, the state of the economy, the direction that the pandemic might go in the future, just extrapolating with some data. It's so easy to understand the bearish cases, but there was a bullish case along the entire way. And if you understood the bull case, even though you had to do a little bit more mental gymnastics to kind of understand a few things that are going on, the recovery that was starting to happen, the printing and the stimulus, and all of these things were pointing to a bullish scenario. And it was important to understand both the bear case, of course, but the bull case. And it's important to understand that one case oftentimes is harder to understand than the other case. Just because one of the cases is more difficult to understand doesn't mean it's any less viable and valid. So you have to understand that even though one side might be harder to understand, doesn't mean it's less important. Usually it's more all the important and all the reason why it is important to understand the other case. GameStop is the latest of this debacle, the failure to understand what the bull case was. The bear case was kind of very simple to understand. This was a retail stock. It should be trading like other retail stocks, and gaming, as we know it, is going to be more digital and less of a need to have these retail stores. But the bull case was very intact. We'll get into the bull case later, but more examples of the past. Tesla has a lot of bears and had had a lot of bears in the past. And it was hard for the bears to understand the bull case. Whether it was out of simple negligence and completely ignoring the bull case, the main point here is that the bull case was a little bit harder to understand than the bear case for Tesla. Tesla seemed always overvalued. The idea of where Tesla was going, you really had to understand that this idea that electrification was going to be inevitable and a pivot was going to happen where you're going to see more electric vehicles on the road than gas cars. And this was a hard thing to understand that this was going to be the case. And not only that alone, because that wouldn't justify it alone. You have to understand that Tesla really is a tech company and a software company, and the revenue going to be driven by Tesla as a company is going to be software driven. And understanding the disruption that would happen in the future with their battery storage technology in various industries. And this is an example where you have a bear case, and it's just this company shouldn't be worth any more than a GM, or it should be worth even less than a GM. So this was the scenario that we would see for a company like Tesla and comparing it to a GM and failing to see what the bull case is. And we have to know as an investor, there's always a bull case, there's always a bear case, there's always something that can go wrong with any investment. And so it's understanding what that bear case is helps us identify when our story might need to pivot and change and identify what the bull case is. Again, if we happen to be short on a stock for some reason, understand what that bull case is and what that pivot would be, and understand the bull case more than the bulls. Understand the bear case more than the bears. If you're shorting a stock, I think it's really advantageous to understand the bull case more than the bulls. We see so many bears go on CNBC, and they seem to not even understand and not even acknowledge the bull case. This is a little bit troubling because if I was to short a company and wanted to be a bear on a company, I'd want to understand the bull case more than the bulls understood their own case. And that's why I would understand that this is a smart opportunity to short, for example. But the bears seem to ignore and not understand even the bull case. And basically, this is advantageous for all of us. Again, in March, if you were to seek what that bull case was and really identify this bull case, have a bull thesis would help you to be long stocks, would help you to add stocks. And In addition, what is going on with GameStop? GameStop, there is a real bull thesis to be had, and there's a real bull push. The bear case is so obvious, and the bear case in terms of why people are shorting the company, they're not really paying attention to what the bull scenarios are. It is important to understand what the bull scenarios are, why it is that people are so bullish. This is an area where sometimes we have to do some mental gymnastics and to dig real deep to understand why it is that this company might be bullish, why it is that people are buying into this company. Oh, there's actually 90% of stores that are actually cash flow positive. There's actually a new chairman that's joining this company that's actually a big deal and has a big vision for this company, that it really believes in this company, or he wouldn't have joined on the board and bought so many shares. So these are some really big important things to consider. Why it is that some people think that this stock is going to go a lot higher. And digging deep and understanding these scenarios, especially if you are on the short side, and also in turn, if you are on the bull side very heavily, understanding the bear side of that is very important to understand because you don't want to be blinded in either direction. And I'm not trying to say that GameStop is going to go a lot higher or GameStop is going to go a lot lower. The main point of this is to understand the bull case and the bear case, and you evaluate these scenarios. Which hypothesis makes more sense to you as an individual, not putting blinders on to either scenario so you can have an exit plan, you can have an entry plan, all of these scenarios. Just having information will help you become a better investor. And it's just mind boggling for when you have people that are short a stock or people that are just hyper bullish on a stock too, the failure to see the other side, which often gives investors blinders and ends up creating the largest pain for investors on the short side or even on the long side, just failing to see the other side. Well, I'm going to end this right here. I hope you guys got some value from this content. And if you haven't already, smash that like button, subscribe to this channel for more content like this, and I'll catch you guys in the next one. And keep in mind that none of this is financial advice. This is just some random guy on YouTube drawing some stick figure lines on a chart talking to you guys.